Hello and welcome to another episode of Coffee with Caprill. And if you watched the last one, you know that I'm really drinking tea today. Uh, Two things I wanted to get into with you today. The first one has to do with the changes in the tax law. Now, first of all, I need to apologize. Um, you probably are all familiar with AI now and ChatGPT. Very useful tool, not perfect. And when the most recent tax legislation was passed, the big, beautiful bill, that is the actual name for it, by the way. I was eager to get information out to all of you with what those changes were. And so I relied on ChatGPT to help me. And based on my perusal of it, it looked pretty accurate. It was not. So since then, Wes has sent a modified version of that out to you. Now, as always, you should consult your tax advisor, consult us before you do anything. But there was one change on there that is important, and it's worth examining, and that gets to the issue of the increase in the standard deduction for retirees. So if you're married filing jointly, the standard deduction, because most people don't itemize anymore, was $30,000. It's now going to be $36,000. So what does that mean? Well, it means you're going to pay less tax. Now, the reason they did that was they're trying to soften the tax hit on Social Security. But I want you to understand something very clearly. Social Security is still taxable. All right. Now, whether you pay tax on that or not is going to depend on your total earnings for the year and your deductions. All right. But that extra 6,000 was given to people 65 and up specifically to soften the blow. But Social Security, by definition, is not a tax-free benefit. It could be for you, but it's not tax-free. You will have to report it, and whether or not you pay tax on it will determine on what your deductions are and what your income was for the year. All right. Now, I'm not going to get into all the, if you earn this much gets taxed. I'll be more than happy to do that. Just give me a call and we'll talk over through. So I'm always a believer that if you have less taxable income than your deductions, while you may be happy to be tax-free, I think you might be leaving some money on the table. So let me explain. Um, as you probably know, income from a Roth IRA is not taxed, right? So let's say between Roth IRA withdrawals and Social Security benefits, somebody's taxable income, age 65 and older, married, is $30,000. Well, you can have $36,000. So do they just walk away happy that they have no taxes owed? Sure. But what about that extra $6,000? Could we do something and use that? And the answer is yes. So the first thing that you could do is you could take out $6,000 from a traditional IRA, assume you have one, that's already subjected to taxation. Now, if you take that out of that six, guess what? Tax-free, right? In fact, you might even want to take a little more than that and pay some of it in that 10% range. Even though you don't need it, you're going to be able to take advantage of that change, that increase. All right. So keep this part in mind. Now, for most of the people with which we work with, the extra 6,000, they're above it anyway. But some aren't, especially the ones who put a lot of money in their Roth, because now they're pulling that money out tax-free. So these are those little nuances that we want to be aware of. So my advice to you is, given all those changes that we had there, if you want to sit down and schedule time with us or schedule a call or a Zoom call, whatever, let's do that. All right. Don't draw any conclusions based on what we've sent you or what you've read or anything like that, because everything is, there's always a yeah, but, or it depends on this, especially with the tax code. I mean, there's so many provisions. it is complex. And if you don't have a good grasp of it, I mean, we have a good grasp of it. We're still utilizing very well designed spreadsheets and software to help us to make sure we don't miss anything. And you know what? Sometimes we still do. So again, feel free to reach out if you want to schedule time. Otherwise, enjoy your summer. The best season of the year, fall, my favorite season, is coming. And see you soon. Bye bye.